Let's shift gears, chat mid-cap IT. Zensar put out revenue growth of about 1.9% in cross-currency terms. You had the EBITDA coming in lower by 2.7%. Joining in on the show right now, we have the management with us, Sandeep Kishore, CEO and MD. Mr. Kishore, soft quarter, margins have dipped. What are your key takeaways and where do you see margins headed?
Numbers. First is on the revenue, we did 1.9% on sequential constant currency basis, 1.3% on US dollar term. Gross margin, we actually expanded at an operating level by 30 basis points on a sequential basis. And this is the second quarter consecutively where we have expanded our gross margin. EBITDA came down a little bit because of the acquisition, some of the acquisition related charges that we had. You would remember we did Foolproof acquisition in Q3, which is completely integrated into Zensar as part of our return on digital strategy, particularly led for the CMO sector. At the net profit level, we significantly expanded that on a sequential basis by 17.1% and on a year-on-year basis by 10.9%. So overall, I think we are executing well to the strategy that we had articulated, which is to be a digital-led transformation partner. On some specific geographies, I think Europe continues to do quite well for us, including Foolproof. We grew 30% sequentially. Outside of Foolproof also we did 7.7% sequential growth. Africa continues to do exceedingly well. It grew about 8% on a sequential basis, both on constant currency. Infrastructure core business, which is predominantly led by our cloud offering, the Vinci platform, which we launched in the last quarter, had a pretty robust growth of about 5.3%. So overall, I think we feel pretty good that we are executing to the strategy which we have been talking about.
Okay, the infra management services, which is almost about a quarter of your revenue, that has shown decent traction. Even the app management services, which is once again a bulk of your mix, has been subdued. So what trends are you seeing at the current juncture, and what kind of revenue run rate can we expect going forward?
So there's no forward guidance that we give, but I think it's fair to call out that digital-led transformation, both at the application level and cloud, which is a part of our digital strategy in the infrastructure services, continues to see some phenomenal action. Last quarter, we did $170 million worth of new booking in Q3. Our pipeline is very, very robust. So we continue to see good traction with our core market segment, which is US, UK, and South Africa. And from a vertical perspective, financial services, retail and consumers, and manufacturing. And so the deal pipeline is actually looking quite good. All of them are led through the investments that we have put in creating the solutions on the digital stack.
A bit about your revenue mix going forward. Will digital be a growth driver?
Yes, absolutely. It will be a growth driver. As we had said, digital will be 30% of our business in this fiscal. With the Foolproof acquisition, we have already achieved that number at the end of Q3, and we will continue to see more investment and more traction on digital-led business for us as a company.
What about your EBITDA margin trajectory? I'm talking about EBITDA margin, of course, not necessarily cross margins. After assessing all the headwinds in terms of pricing, changing visa norms, what can we expect for Q4 and FY18?
So there's no guidance we give, but I think it's fair to assume that the EBITDA will be in the traditional range of, about 15% or so.
On that note, thank you for joining in and giving us a view on your earnings as well as the growth outlook and contribution from various sectors. Okay, we'll slip into a short break right here on the show. Come right back. We've got some top technical trading ideas lined up.